All right, so let's first run through last week because all I did was share the idea and I didn't tell us why. So let's run through the why and then we also go into what we now possibly expect for next week. And as usual, as I often say, I don't trade with more than three time frames. In all honesty, this 4 hours, I just added it. It was not used to be there before. And I think I just added it for the sake of peace of mind. And what I mean by that is that sometimes, because I execute from the 2 hours, so sometimes there are things that, although I've executed from 2 hour, but the way the 2 hour candle is closing is just misbehaving like a witch. But when I go to the 4 hour and I see something clear, okay, my mind is at peace. Okay, so basically, this is a buy that we were in. Okay, because I wanted to go and copy my previous markup, but I just wanted us to see it. So this was like a trend line that I extended into the future. I mean, first bounce, second bounce, third bounce, markets came, broke it, went back up, came, broke it, and from here it sold. I saw this sell, but I did not take it. So the market's coming back. Of course, I was thinking the markets would most likely maybe find supports here, maybe, and then continue. That was why I extended it into the future. So if you look at what I have here, you would see that I have something written there, which is what inducement and liquidity. So these are two things that I've come to understood that has so much made my trading super easier. I used to hear one of my mentors say it until it eventually makes sense. And what was it that he often says? Or it's just the general statements in the market. The market always moves from one point of liquidity to another. So when market takes external liquidity, the next thing the market should go for is internal liquidity. I'm saying this because I believe that if we all can understand this concept, it would minimize the rate at which we just try to force interaction with the charts. And it would also help us understand how to maybe easily now know where we think the market should go to overall. So this was a new expansion to the upside. Yeah, so this was it. So this was all we had then. So this was a new expansion to the upside that definitely took out this external liquidity right here. That was taken out. And so this was a sweep of liquidity as usual. And markets just went. So the market having taken out this liquidity, when you check it from the 2 hour, was there a break of structure at all? Let's check. Of course, I did all this due diligence. So there was a break of structure, but wasn't so strong enough or so convincing. But when we check from the daily, my network is hanging. All right, so when we check from the daily, we had a very clear break of structure to the upside, which is what we have right here. That was the first thing that confirmed my daily biasness. I mean, came, took all this external liquidity and took all the internal liquidity, took the external, and just one massive candle, everything spiked to the upside. So ideally, since the market has gone as taking external liquidity, it is in the nature of the market that the market should what? The market should come back inside the range, you know. Ideally, before this expansion, sometimes the markets create internal liquidity before eventually going this high. But in scenarios, I've explained this before now, that in scenarios whereby the market did not create external liquidity before going to break the structure, the market would create it on coming back. And if the market does not create it on coming back, then this previous external liquidity is the liquidity the market wants to take before it continues to move back up. Or there may just be a new change of direction entirely. So until the market does either of that, we do not know whichever one the market wants to do. So when I sent that markup, I sent it because, and I mentioned that all we are waiting for is what? The creation of internal liquidity. And when the market does that, we will continue to move to the upside. Now, we could have simply tagged this. Oh, my bad. Excuse me. Yep, we could have simply tagged this creation of internal liquidity, this relatively equal low. And the fact that the market actually created this low and even swept it, that could have served rather as what do we call it, as internal liquidity. But for some reasons, I just was not okay with this break of structure. I was expecting something much more impulsive to the upside, and I'd have executed on the retracement, and then from there we move up. So ideally, I just was not okay with it. So the market on coming down, I somehow knew that this low was going to be taken, this one was also going to be taken. And to be honest, I wanted to set a buy limit here, you know, put my entry here exactly. But the reason why I did not do that was, unfortunately, I didn't know which kind of stop loss was going to be ideal. So it wouldn't make any sense. That's what that did not chop my stop loss and did not start going. I may I may cry. However, so the markets haven't now taken this external liquidity back and has come back inside the range. So not only did it come back inside the range, of course, it came back inside the range and then broke the previous structure. And just as I was expecting here, it did not only break it, it broke it what? Impulsively, as we could see. So following the same thing we've been talking about, concept of internal liquidity. Somehow I just knew that this was going to serve as what? As internal liquidity, and then this other block should hold. Of course, when I sent the markup with two entry because I was also ensuring I wasn't ignorant of this equal lows, and the markets could just want to come tap into this imbalance, and most likely maybe just tap into this whatever name they call the candle. Me, I don't know. I shall know that. What I just know, I understand is what the candle does. So I had another entry here, and I categorically mentioned that that is we splitting our risk. Splitting our risk for the purpose of what? So that the market doesn't just go and then it leaves us behind. Having established that, I set both entry. So it's simple. Order block, no special reason. That's it. That's the reason. This is the liquidity before the order block. Yes, something dicey happened here. And this is where inducement comes in. So what was it that happened? If you can remember, I said we marked this point as what? Internal liquidity, right? And then what happened? Markets came, took it. And if you look at it very well, we look as though we had this internal break of structure right here. But somehow, I just knew it was false. And at the same time, news was coming because this was a Friday. So news was coming. And of course, what do you know that the market often do before news take place? The market will want to deceive traders to go in whatever direction. So I had actually initially set an entry here with my stop loss below the low of this black candle. But I just told myself that, Olanrewaju, this is not the game plan. So I deleted that entry and wait for the initial entry that we wanted. And then what happened? The markets came, tapped into it. And of course, where should be the next place that the market should head to? We've taken external liquidity. The next ideal place is what? The next external one. That is why my TP is set right below it. So our expectation is that the market opens and it just does what? Takes us there. And this is also like a trend line from the, I don't even know if it's from the daily or from the 4 hour. Okay, I think it's from the daily, a trend line that we are looking at. Okay, let's see what may happen around here. Most likely we may have a break above it. The market comes back to test it and goes. Or who knows, it may just drive the price down eventually. So we are conscious to check what the market is doing or will do around that region. As for USD JPY, yep. So for USD JPY too is the same concept of what? internal liquidity and what's external liquidity. And what are we talking about basically? The markets from here, took all this external liquidity, right? Came, created internal liquidity, took it again, went for the external. So if we are continuing still towards the upside, all that the market was supposed to do was what? Come here again as usual. We could say that all of these were what? Internal liquidity. The market took it, broke structure to the upside, and we were actually thinking that from here the market will just go and take the external liquidity. Funny enough, I wasn't paying attention to USDJPY until a guy mentioned it, and then I told him that the fact that the market is beginning to stall, because it's like how many days already? Where's our ruler? In total, this is like 17, this is like 18 days around the zone. And I told him clearly that the fact that the market is beginning to stall around here means that there is a foul play, most likely in anticipation. And then, so why did I change my bias to the downside instead of the upside? I switched this time around to the weekly time frame. And then from the weekly time frame, I realized that everything is screaming we want to move to the downside. So why this looks like a long term, and funny enough was I saw a fundamental news eventually after this analysis, not even before, that supported this analysis. So I analyzed it, and then we were waiting for it. So basically, what gave birth to the thought process and why did we execute at that point? Let us check that also. Okay, we have to go back to the daily. All right, so from the daily, I mean, these are like, if I would take this box and hide it for a moment, yes, these are like stack of liquidity, like that the market did not touch. And fact is that market does not move until it has taken liquidity. So somehow these are like relatively equal lows that I just know that ideally, I mean, the market should come for them. So markets may come for them. Maybe, who knows, taps into this entire region here. And yes, into this entire region. And then maybe from here, we can begin to move back to the upside. But actually, this is my long-term targets because I'm like all these ones. So just look at them now. They are like hanging fruits. So the market can just create, who knows. USDJPY does that thing very well. Like the guy, if he just creates one abnormal spike, come and take it and then continue to move back up. So the entry, I don't know why I'm jumping. So once again, look at it. There was this break of structure to the downside when we switched to the line chart from the daily. Yep. So there was this break of structure to the downside for everything. Like took all of them, broke structure massively, 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 and took those low. So I was expecting a retracement. Now, funny enough, I mean, if you look at this stop loss is a 65 pip stop loss. This is the first time ever that I'm taking a trade with a 65 pips stop loss. In fact, I'm not even sure I've ever taken 30 in my entire life. But of course, I'm also growing as a trader, and then I'm trying to improve so many things. Yeah. So on the 2 hour, basically, we could see that we had this sweep of liquidity, and then we had this internal what? We had this internal break of structure. So this is not a break of structure on a 2 hour to the upside, because on the daily, this one broke structure back to the downside. So this is a break of structure. So I had my retracements. I was expecting a retracement into this particular zone that I marked out. But since I didn't know where exactly the market could retrace from, I just set my entry here and I'm like, I thought I am bad. Make I put there's a reason I actually placed my stop loss above this eye, above this particular eye. Yeah. And I'm like, I thought I am bad. Though. If anything should bring the markets to this point, that means the sell setup is no longer valid overall, actually. So the market came first, over here, dropped massively, gave like another internal break of structure. In fact, I actually, okay, don't let me jump the gun. So gave what looked like another internal break of structure. Someone else could have entered here and said that, correct, enter here, stop loss here. Look at what the market did, came, take you out, and then come back inside the range. That would have been painful, like super painful. And again, also, this is the longest trade I've ever held in my entire life. This trade came alive on Monday. Look at it, Monday. And even till Friday, it's still no go TP. This week tested my patience, guys. So, um, yeah. So basically, in fact, I'm thinking that there's another opportunity for a re-entry that is like this may most likely. So these are like equal lows that the market should come for. Trust me. They're like equal lows that the market should come for. So initially I had another entry somewhere here, but I closed it because I felt that was not according to the plan. So I'm suspecting that this may serve as an other point of internal liquidity. Um, yep, this may serve as another point of internal liquidity. The markets may most likely come back to somewhere here. Yep. So remember I said my stop loss is back to break even, right? I may most likely either go and adjust it or leave it and set a new entry here. I don't know which one I would do yet. In all honesty, I don't know yet. So yes, I'm suspecting that this may be another opportunity to join this move to the downside. Yep. So entry there, stop loss there. Let's do it the way Satomi taught us. Like you deal with zeros. Zero, zero, zero. Let's just make this one 400 rough. Yeah, 400, and then let's make this one 2000. Yep. So that's like a 1:5 that we may anticipate. So it's like we've actually done the outlook for USDJPY already. So we are still bearish on USDJPY. And of course, for Euro USD too, we are still bullish. We can't see anything yet, actually. We wait for the market to open. Yeah, and of course, can all of this also serve as internal liquidity? Who knows? It may. It may. That the market may want to come, maybe tap into something here, you know, and then from there still now go back up. Who knows? The market may do that. It may. That's why after the market had done 1:2, I have my stop loss to break even because I've not closed anything. Yeah, so that was 1:2 and I've not closed anything. So it won't make sense that I saw 1:2 with my Kuro eyes and then they still come back to take me out on stop loss. So I would leave this right here and then most likely set another entry, just like I'll do for USDJPY. So if the buy is still going to hold, let the markets come. Let me check something with Fibonacci. All right, so the 61.8 level. Yep. At least for those who trade Fibonacci, we know what that may mean. Yeah, so that's like your 40 pips or more. Ha 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 ha. Like Laila. So 400. So, and let's say this one, 1, 2. So that's like a 1:3. Yeah, who knows? So that's the outlook um for Euro USD2 for the week. So that is to say that if who knows, these points may serve as internal liquidity and the market could just go up. So in case the market refuses to go up and it comes back, takes what out at break even, this will most likely be our next entry for Euro USD. And then for USD JPY, the same thing. If the market comes to take us out back at entry, this will be our new entry to still follow the market to the downside. So that will be all for today, guys. It's that simple. If you come back and replay these recordings, you would be able to understand how the thought processes that gave birth to this analysis came about. I believe that's how I also became who I am. Each time we have weekly analysis with our coach, then our mentor, Tony Blair, I also come back to those videos and I try to listen to him and the kind of ideology with which he is using to analyze the charts. And then I'm like, oh, this is how Tony thinks, and this is how the market actually works. This is how Fortsman thinks. This is how the market actually works. And now I have a new combination to it. That's actually for the corner. I mean, there was a way he explained these inducements and liquidity that made super much sense to me. Like it made super much sense, and I'm just grateful to all these people because somehow they are the ones who have influenced me so far to everything. So that marks the end, guys. So we have successfully come to the end of this week outlook. Let us remember to stay guided and guarded in the markets. There are so many other things that we can teach ourselves on how to stay guided and guarded, but that is not what this session is for. So please stay guarded, stay guarded. Don't rush. Follow the setup, follow the markups. If I don't say that I'm changing my move, there's no reason why you should change your move too. And then let's have a winning week. Let's have a prosperous week, guys. So please, let's all stay chests.